and welcome to another market recap. This recap is from Monday, the 22nd of July till Friday, whatever the date is then. So this week we actually had some momentum. Now it is July, so the period is the summer holidays, it's the summer, so the market tends to be very corrective around these times. The past backdating data shows that, especially from the end of May towards September, it's a very corrective market generally. We do get some moves here and there, but it's not as common as the other periods. But this week we did get a really fantastic move, so we'll go through that right now. So looking at the current price action, we are trickling down. This pair is the Aussie dollar versus the Aussie dollar versus the US dollar. There we go, got there in the end. And this pair tends to move incredibly correctively. So this is market open, not looking for any turtle soup trades or liquidity sweep trades because we're moving down. We have a trending market, although it's corrective, it's still trending. So there's no range to be taking liquidity from. So the setup that I saw and I took, right here we have momentum, a nice little bit of momentum. Price is telling us that it wants to continue down. Again, nice momentum there. And then here we failed to close and get a tiny wick, which is a warning that price might slow down or might reverse. We need to see what happens next. So I'm looking to see if price shifts up or pulls back deeply. Because on this pair, if we see a shift, it is unlikely to continue. Or if it does, it's likely to be a lot more corrective, more of a channel style or a range style. And it's, the volatility is able to take us out of the markets. And a deeper pullback, same again, where it's unlikely to continue. Or if it does, it'll be much more, it'll be too risky to take a trade. So I'm looking to see if we've got signs of either of those two. If we haven't, then we can place a trade. So right here, we have a nice little flag, and this is my entry point right here. We haven't seen a shift. It's not a deep pullback, so I'm very happy to take this trade. So we'll mark what I took on there. I've got a 14 pip stop loss as per my plan, and I will be trailing my stop loss above the high. So when the low breaks, I will be placing my stop loss 2 pips above the high. And I do this because I'm trailing my stop loss with the trend, but I put 2 pips above or below, depending on the direction. So price can, if it comes back and hits the high but then continues back down, it doesn't take us out. If you put it right on the deadline, sometimes price comes back to test the high, might form, say, a double top, but then continue in your direction. So we place 2 pips above to allow for some leeway. And it also shows that if we break the high and continue and take us out, then it's likely that the market is going to either range or the trend is no longer there. So very quickly on this, or sort of quickly, no, not quickly, that's the next one. We range around a bit. We do spike into this, but then we do break the low here. So my stop loss now is moved very close to break even, actually. So that's the trade entered and stop loss moved down. So we have reduced risk at this point. Price continues down. We've pulled back here, so now we're seeing whether price wants to continue or whether it's going to reverse. We have small wicks. We haven't seen anything yet that indicates that it wants to reverse. So now we're just waiting for the low to break so we can move our stop loss. Did that break there? So we've got the low of 2.1. No. So that's one tick above. So now we have broken. So at this point, my stop loss is 2 pips above this high here. We break the low, but we don't close below the low, and we have a tiny wick here, suggesting there could be some weakness. Again, this is a warning sign, so we need to see what happens next. And we get a really nice push down to show that price actually does want to continue. Now, this is a setup that I actually missed. This is a scaling opportunity because we have broken below the low, and price is showing us that it wants to continue the trend. So an entry point here could be 2 pips below. So that's what? 191. And again, it would be 140 stop loss. Again, it's 2 pips to allow for spreads and allow price to, it's going to that area, but in case it doesn't hit quite there, or if the spreads don't trigger in if it hits it. So the 2 pips below allows for that, gives you that leeway again. So this is an entry point right here that I unfortunately missed. This is the only trade that I took this week, but we'll see further on, you know, the other trades that I could have taken and how they play out. So this one would have been tagged in, ranging around again, and then we continue down. So off the bat now, if I remove this, my stop loss for the first trade would be above the high here, 2 pips, and this risk is instantly basically reduced. So I would have the stop losses in the same place. So if we get taken out now, this trade would get taken out for just about 1.48%. I haven't put it 2 pips above right now, but around 1.48%. And this one would be, you know, that's really small. So like a couple of pips, basically. Yeah, like 3 pips. So reduced risk on that one, very close to break even. So it would have been a very good thing here. Price continues. We range around a bit, but then we break down. Moving down, price is still telling us that it wants to go down because we're seeing this momentum. Any pullback that we get is fading to reverse or shift in momentum. So momentum is still to the downside. This is an interesting part. So here right now, I see a shift. So price is warning us that it could actually reverse here. But what happens after the shift? Price continues up, but not with the same momentum. We continue up again, but then have a wick. We retrace, move down, wick down, and we shift up again. So second time we've tried to shift up, what happens after this? We see a wick down. It's trying to go up, but failing. Okay, that's the key thing here. And then price moves down with momentum. I wanted to take this trade. Although we have shifts and it's more of a deep pullback, I see this more as an ascending channel that is failing to move to the upside, because every time we have a shift, it failed. And then we get a strong part momentum down. This as a channel fits my idea of what a channel is. And I haven't back tested my plan thoroughly. So I did not want to take this trade just because it's not, I have a plan for it, but it's not fully tested out yet. And this is something that a lesson that I'm learning is I need to trust myself more on these trades that I know look good from my experience generally in the market. So for this one, because it's a channel, I think it's actually ascending reversal. So that's a 12 pip stop loss for that. So this is the second scaling for this trade. Again, I didn't take these trades. This is the only one I took. However, this is the third scaling on this move, the second scaling on this move, sorry. Price moves down and breaks the low, therefore our stop losses, this one wouldn't move because it's basically the same place, but these two would then be moved 2 pips. So both of these have profit locked in. So if I do that now, to the low there, again it'll be 2 pips, but we're just marking it for now. That stays where it is. Just because the low breaks, if I had to move this stop loss more than I originally planned, then I wouldn't do that, because then you're risking more than you initially set out for. This, sorry, is actually also a trade. My bad. So we've got a channel, we've broken down, and a confirmation that it wants to continue is, again, we've had this pullback, but there's been no shift. But this flag, if you can see, is incredibly similar to the one that we took where we moved down, we move up, we retrace that one, and then we continue. And this is also the entry. So if we look at the one that we entered on, where ignoring this section here where we move down, we move up, we pull back from that, we move up and break this, and then the next candle moving down was our entry point. It's just the same version right here. So automatically, what time is it? Well, it's 11 o'clock, so just after spread hours as well. So on the open at 12 o'clock candle, I would have been asleep for this anyway, or certainly not at the charts and not looking. And it's one of those things in Forex where sometimes if you're expecting a setup to happen and you're someone who wants to, be there for that in terms of you're happy to set alarms, happy to wake up and check the markets, and that's fine. I'm someone who likes my sleep. I really like my sleep. And if I disrupt it by, having alarms and waking myself up just to catch a trade, when I can, if I'm already in this one and there are trades during the day, I'm happy to miss out on ones during the night just for that. Honestly, it's because I prefer my sleep. I'm, happy to prioritize my sleep over that. So this one, 14 pips again. And now we're just waiting to see if it continues. If it continues and breaks this low, then automatically we're moving all our stop losses to the high here if there's no new high created, which it does. So right now this stop loss would be here, and all of these stop losses are here. Again, to reiterate, I did not take these trades. I only took the first initial trade. I can't remember if I said this, but I feel like this is the ceiling that I've hit because I'm in a trade. I kind of got this fear that I was going to give back to the market if I took a trade and then it reversed and took me out. I didn't want to do that. So there was a bit of fear and a bit of greed playing on there, I think you would agree. And again, this is why I just need to trust my plan, trust myself, and take the trades that I see, because right here I'm just laying so much money on the table. Basically, very close to break even on this trade running at 2% and this trade running at 1.23. Again, a couple of pips above, so not that much, and this one at 4.818. So really, really good opportunities in this whole rundown. And this is what I love about this pair. It's one of those I love it and I hate it, because it's so corrective and it corrects so much of the time. But when you catch a move like this, it can be so beautiful. It's gorgeous. So we've continued down, we've got another wick. A wick is a warning that price might be slowing down. We could range or reverse. Could. We need to see what happens next. Are we going to see a shift? Are we going to see a deep pullback? Or is price going to range and then continue? So it pulls back for a candle and then breaks. We have another opportunity right here because price has moved down. We see this wick, we've pulled back. Price has told us that it does not want to go up, and it has pushed down, telling us that it wants to continue. Now, there is a very small wick here to be mindful of. However, it is small. We have closed at a good distance below the low here. So I don't see this as a big threat. It might be a slight warning, but it's not one that would jeopardize the trade. But again, as you can see, this is at 2 o'clock in the morning, so an entry is at 4 o'clock, and your girl is just not awake for that. But we'll mark it out just to see what this move actually presented in terms of what I could have traded here and the profit potential and what a move could do. If you've been watching the recaps, I can't remember how many trades I placed over June, but I ended the month at minus 2%. And I haven't traded, and I barely traded in July. I may have placed one trade. Yeah, barely any trades. But here we are, all the trades in one go essentially, and it's gorgeous. So now we're going to see if we get tagged in. Oh, this would be 2 pips below, sorry. The entry price 5.4. Perfect. And again, the 14 pips. So now we're seeing if price comes up, tags us in, and continues. Price goes up, but continues before tagging us in. I'm doing that one. Yes, so it pulls up and continues. So I'm now going to remove this trade because the new high is now here. So again, I need to move all my stops, but the new high is here. So if price came back up to this point, that would be breaking the high and therefore changing the direction of the trend. However, this here is very similar to this here. In fact, it's essentially the same, but just a different shape. So this is actually an entry point here because we've got one pullback with an inside bar and then a continue. I do believe that's the low of 494, 496. So that's 2 ticks below. So it's just about. So again, we'll put our entry points 2 points below with a 14 pip stop loss and move it to where our entry would be. This one is at 6 in the morning. So there is a chance that I could be awake for this. Again, I didn't take the scale-ins, but there is a trade here, and it's something that I could have been looking at or should have been looking at, but the timeline, I don't think I would have been awake or around for that. Maybe, I can't tell you what time I was awake at that point. But again, I'm just showing you right now the opportunities that happened on this rundown and how I am seeing it. So good momentum down, telling us price wants to continue. Next candle comes up, tags us in, and retraces actually. So the low of this one is 406, and this one is 410, so it's higher. Price continues here, but we don't close below the low. See, compared to these two moves where we did close below the low and in a good fashion as well, small wick here, no wick here, this one didn't. So this one wouldn't be a trade for me because it was a weak break. It's a warning sign that price might be slowing down. So if I see a warning that price might be slowing down, I'm not going to take a trade to the downside. However, as you can see, we've broken the low, so I need to move all my stops anyway. And this trade would be basically break even, just below 4 pips, so very close to break even, which is fantastic, which is like what we want. Price has continued again. There was some momentum, but then we see this wick. We see another warning that price might be slowing down. So we need to see what happens after that warning. Again, this pair does trend correctively. So these warnings are just that at the moment until we see evidence that if we saw a shift of momentum like this after a wick, that's more confirmation that price is slowing down because price has tried to move down, failed to move down, left a wick, and then shifted to the upside. So there's a very big imbalance there. So now we're just seeing what happens next. We get a retrace. Price continues. Again, I don't think this closes below, but it's a very weak. It's much weaker compared to these two, so I wouldn't be placing that trade there, although it's very similar. I wouldn't be placing it. However, we do now have a new high. So this trade will be moved to there, that to there, to there. This is also why I'm not changing them all to 2 pips above, because that would take me ages to type it all in. And I'm trying to get through this quickly anyway, because I know this can go on for a while. Prices continue down, showing us that it's, happy to continue. Then we get a retrace. Do we see a shift? Do we see a deep pullback, or does price continue? Actually, I need to, hang on. I missed that key detail. So at this point, before this candle here, because that was a news candle, I saw that there was going to be news at 1:30. So I didn't want to be in that news alert, because for this funded account, if you have a trade, if you close a trade 2 minutes before, 2 minutes after, and in that window, it doesn't count, or it violates your account. So because of this, I didn't know how volatile this news was going to be, whether it was going to plummet down or push up. So because of this, around 1 o'clock, I decided to close my trades. I think price was around here roughly. You'll see. This is just to get an idea as to what was possible and what I actually got. So that's 1, 2, 3, 4, 5 trades in a week. Absolutely gorgeous. I think you'll agree, percentage gains right there. I only got this. Actually, that's a perfect lineup because I did get 8.54%. So I only took this trade. One trade got me 8.54%. I was 2 pips in drawdown, and then I was 4, 5. I needed to get 2 more percent. I was 6% up from, and then 2% away from what I needed to get just from one trade. If I'd done all of these, then, or at least one of these, and I would have, made enough to pass the first phase. Maybe not this one, but yeah. So fantastic trade. A shame I didn't get these, and it was a good lesson to see that I'm capping myself if I'm in a trade, and just because I'm in a trade, as long as it's in the same direction, because this one you can't have 2 trades that are in opposite directions. So if you've got a trade that's running for a very long term, you can't take a short term opposite direction trade for this account, or the account that I'm on. But here we have 8.54%. I need a calculator for this. Calculator. Oh, you'll never have a calculator in your pocket, maths teachers used to say. 8.54% plus 7% on another trade, plus 6.83% plus 1.88, 24.25% in a week, in a week. That is the power of Forex. When you can trade well, that is what you can do. And it's so wonderful to see. And it's really exciting. It's just so cool. And it's worth waiting because you might have some months that are dead. You might lose, you might be break even, you might be a couple of percent up because it's a quiet period. But then you get these months where you can make 20% or something crazy. And it is weird that, Forex is like that, where you either make no money and you're starving, or you make all the money and you're buying a private jet. You know what I mean? But it's this was really cool. This was a very cool week, very exciting to see, and it was really nice. I'm so glad that I got into this trade because that was such a nice confirmation that I'm on the right path. I'm doing good. I'm doing the right things. But there are still lessons in terms of, like, I missed out trades because I wasn't. My attention, I remember this. My attention had dropped significantly because I was so focused on this trade. I wasn't really paying attention to what price action was telling me in terms of, I wasn't focused on, can I place another trade here? And not in a greedy way of, can I jump in the market? Is there more? Can I do this? Can I do that? It was are these setups fitting my plan? This one was an obvious one. Just because, we had that shift, we had a very obvious channel here. But like this one here, this one here, didn't even notice it, didn't even notice it. And same with the other, this one, this is the same as this. I mean, okay, this one broke down a lot faster, but the setup's the same. And I completely missed it. I didn't even see it afterwards. I didn't look and think, oh, there's a trade there. It's only until I did this, I was like, oh my goodness, So I missed a lot because I wasn't focused. So that's a lesson to make sure, just because you're in a trade doesn't mean you can lose focus. But yeah, a fantastic 20% there. Crazy. But I only took the 8.54%. I'm still happy with that, right? That is still a really good percentage, but I just need to make sure that I'm so if I had moved my stop losses when price broke below here, all the highs, it would have been 2 bits below here, and then this would have taken that out and basically violated all the accounts. So glad we didn't do that. Continuing to the next day, so what are we on Friday? 4, 5, 6, 7. So now we have a range. Prices shifted up, but failed to continue the shift up, and now we're in this range. So I am now looking for a turtle soup trade because I'm looking to see if price can break above this area and then move down, or break above this area and then move down. So on the 8 o'clock candle, we move up above this area, and I do believe we either touch into so we then actually break above into this area as well. So that's more confirmation for me. Like, great, we have now tapped the other area of liquidity. We have seen 2 moves up. So now I need to see a strong move down to show that price, doesn't want to continue. If we get a weak red close here, then that's just not Gucci. So we get a shift in momentum, a slight shift in momentum here, which is what I wanted to see. Brilliant. Enter the trade here. Where's my entry? 2 pips above. So that was 11. Oh, this was on the 15-minute chart, actually. Sorry. I think this is the candle that I entered on anyway, because it's confirmation. I entered around here anyway. Oh, no, because it must have been there. Because it was a 7 pip stop loss. So it was about that. So we get tagged in, we're moving down. Price shifts up. Continue up with weakness. Range. Move down, around. Volatility with the news event here. I see what I've done wrong here. This was the second trade I took because I actually took this one over here. This price moved above this first level. Then we get this little evening star, very small evening star. So I actually entered here, and then of course it came and took me out here. So we're -1 at this point. I then retook this one because we had then broken above this level and we saw a nice push back down. Although it didn't completely engulf, it was still a nice entry. So I still took that, but then we ranged around. And again, I see that we have news at this point. So I actually exited the trade around break even. Sorry, so I missed this one. So I took this one, took a 1% loss, risked 0.5% on this trade, but then took out manually at break even because of this news event here. And I didn't want it to be taken out and violate my account. So that was -1%. So this week I'm up 7.54%. I now need 3% more instead of 2% for my funded account. But those were the trades this week. Absolutely cool. Didn't take the scale-ins, only took the 8.54% one, but that's still good. There's always room for improvement, but we're very happy with how we did. And I will stop waffling now because I know this is going to go on for a long time. So I hope you all found that. You can see that minute trade here. So we'll see how that goes next week or the end of this week. But I hope you all have a very fantastic week, and I will see you all anon. Take care. God bless.